Welcome back to another episode of Freedom Finance with Lanny, guys. And I did a thing. I sold some stock, guys. As a buy and hold investor, it is always very weird to hit the sell button on a position that you bought probably close to 10 years ago, because you never really buy it with the intent to sell it. But sometimes companies change, and sometimes you get fooled once, maybe fooled twice, and I'm not about to be fooled again, guys. So today's video is going to focus on the big stock sale, possibly a big stock purchase from the stock sale, why I sold some stock. You'll see all the reasons that pretty much forced my hand, but I was glad to do it in the end. So grab your favorite beverage, your beer, your wine, your liquor, your coffee, that espresso. Let's go, because you're Italian this weekend, baby. And let's dive into selling stock and redeploying that capital. Let's get it. So as buy and hold investors, you never look to sell stock, guys, especially dividend growth investors. We buy dividend stocks that consistently grow their dividend every single year. Companies would never stop raising that dividend, right? They'll always continue to perform very well, right? Well, as we all know, that is definitely not the case. Kind of flashback a little bit, to AT&T was kind of one of the first ones when we were buying dividend stocks, my wife and I, and obviously, Bert from the Diplomats, that was the first stock that actually ran into some trouble, right? By having poor acquisitions. Then post-COVID, you found many other companies performing terribly as well that had maybe had some history of growing dividends. Let's fast forward to now though, guys. If you haven't taken note, ever since the beginning of the year, I've been looking to move on and slim down my portfolio into less individual stock positions. I think I've put out a few videos on what I've sold so far, and I've always talked about what stocks are on the chopping block and that I can't wait to exit at the right price. I even made a video, check that out, on reasons why you would sell a stock, at least from my perspective, guys. So on September 26th, I did that thing. I sold some stock. I sold what once was a prior dividend king, actually. Think about that, a prior dividend king. Let that sink in. After you've let that sink in, guys, it's time to break the news. I sold my shares in 3M, ticker symbol MMM, on that 26th at $140 a share, guys. I had 36 shares, sold them off at $140. So that happened. But I sold another stock. But let me actually break something down too. Prior to these sales, I had about an $1,122 capital gain net for the year already going into this. And that was from my West Rock sale because they were getting acquired from Smurfit Kappa. And I didn't want to own shares in the other company, and it was going to be a taxable event regardless. So I had a over $1,100 gain already for the year that I wanted to offset, obviously, to save on taxes. So it came down to 3M and this other stock that we'll get into. But 3M, I recorded actually a gain of about $493 that you'll see here on the screen. Held it for a long time. Obviously, it's all long-term capital gains here. So why did I sell 3M? One, the lawsuits. Even if the earplug lawsuits are kind of done, kind of over, it showed me that not every business can anticipate every issue that could happen, and in this one, billions of dollars. Second, they reduced their dividend. They reduced their dividend a few months ago when they spun off the healthcare business unit Solventum, ticker symbol SOLV, which I sold earlier this year. You might recall that from a previous video. So lawsuits, spun off a company that I didn't want to own, and they reduced their dividend. So at that point, I was like, okay, 3M, you're no longer a dividend growth player. I don't expect too much growth going forward. And they were up about, 55 to 60% at the time, this year, at the time that I sold them. So it was time for me to exit, and actually squeaked out almost a $500 gain. Again, which is peanuts compared to how long I've actually owned the stock when you think about it. But that's a gain. So that pushed me up to around, let's call it $1,600 in gain. And I needed to offset that. Well, let's introduce Warner Brothers Discovery, WBD, the worst spinoff I think I have ever seen in my existence of investing so far. AT&T spun off WBD a handful of years ago as part of their selling of, getting out of the media business, right? Just to focus on really telecommunications, right? So WBD saw that thing just rot and just drop to the point where I sold them at like $8.40 something cents, all 67 shares, and recorded a $1,590 loss, which fully offset pretty much all of those gains outside of about, $25, let's say, as you'll see on the chart. Why did I sell WBD? Well, they paid no dividend. There was never a rebound, to the stock really ever outside of, the meme era where I could have sold them out at like $75+ a share. But it was just time for me to save, quite a few $100s on taxes as well. Again, after the 3M sale, had about $1,600 in gains that I would have paid taxes on. So this would have definitely saved me, and this did and will save me approximately probably $275 to $325 in taxes come tax time. So that was huge right there. So how much did I actually receive? I received $5,600 in total proceeds here, and reduced my dividend income by about $100.80 from the sale of 3M and WBD. So I had $5,600. And I deployed it right away, actually. I redeployed it right back in the market. I bought Vanguard's VYM 22 shares, high dividend yield ETF, $2,800, and added $80 in forward income. And then I bought the company that I've been talking about on this channel at the Diplomats. I've been talking about them quite often, which was PACCAR. Ticker symbol PCAR. Bought 28 shares. Again, almost $2,800 invested, adding almost $34. So in total deployed $5,592, and I added $113.46 in forward dividend income. So that netted me around to $12.66 in net additional dividend income from the stock sales and purchase. So I feel very good about that. I'm down now 2 positions in the portfolio, so that achieves that goal. So I added more income, I'm down less positions, and I'm saving on my tax dollars. I mean, it's a win-win-win right now for me. And what's next, though? Are there other stocks that are coming up that are on my radar to also exit? Again, I'm still at around 62 stock positions. Yeah. First stock is Leggett & Platt, LEG. I'm down about $2,600 on there. They cut their dividend earlier as well. So I'm looking to exit them. They're, around $14, $15 a share. I've got a ways to go before I cut ties with them unless I have another large gain that I need to offset. Here's where it gets interesting. I actually have 2 stocks here where I'm in a unrealized gain position on. The first being First Energy, ticker symbol FE. Yes, an Akron, Ohio-based utility company. I'm up about $875 on this stock. Why don't I like the stock? Well, they cut their dividend once, 10 years or so, within the last 10 years, but then they've been rebounding a little bit on the dividend growth, but it just hasn't been as much as what other utility players are. So at a yield of about 3.86%, I'm currently writing covered calls on them, and if they somehow, get assigned, hey, that's okay with me, because then I'll have a plan to redeploy that elsewhere. The next stock is Dow Chemical, ticker symbol Dow. Their payout ratio is very high, close to or at 100%. Stock hasn't really done much for me. I'm up $174 currently in a unrealized gain position. They don't grow their dividend. They're just kind of there, yielding 5%. So I own Basel, and there could be a nice, rotation there. But I'd like to do a lot of movements in one swoop because the other stock is Intel, ticker symbol INTC. Similarly, not only did they cut their dividend, but they now have officially suspended their dividend, so paying out zero. So I have about $2,600 in Intel, paying me $0 right now in dividends. I'm in an $1,182 unrealized loss. So take out Leggett and Plot, and if I actually look at First Energy, Dow, and Intel, that nets out to about $133 in a realized loss. So I could sell all three and redeploy elsewhere and then pay pretty much, there's no real tax impact. If anything, I'll actually save on taxes because I would be in a long-term capital loss position that I can write against my current income. So that's where I'm at right now, guys. Yes, even dividend growth investors sell stocks if the stock doesn't meet their strategy anymore, cutting of a dividend, lawsuits. It's just not the same stock that you bought some odd years ago, guys. So let me know what you think about the sales of my 3M stock, my Warner Brothers Discovery stock, and the redeployment into Vanguard's VYM and PACCAR. Let me know what you think about the 4 stocks outside of Paramount Global that are on my chopping block list. That is, again, Leggett and Plot, First Energy, Dow, and Intel. Let me know if you've been selling out of any of your stock positions as the market has been roaring this year. Where have you been investing and deploying your capital? Like the video, subscribe to this channel, and I'll catch you on the next one.